just let me know.
The screen looks good to me. I will get back to you at 10:15 Pacific. Thank you.
Okay, great. Thank you. All right, good afternoon, everybody. My name is Michael Baltos from Orderflows.com, and today I'm going to be talking about order flow strategies for today's trading environment. It's been a very interesting year. The market's been all over the place. Even today we're down about 1.5%, and there was a very interesting presentation by John on the last presentation. He has a more macro view. I have a more short-term view, intraday trading. There are so many ways to approach the market, right? There's no right or wrong way to take money out of the market. Like I said, there's literally probably thousands of different ways to make money in the market. And your job as a trader is to go in and take that money out rather, day in and day out. So if I have your permission, I'd love to share what works for me, and that's order flow analysis. So, for those of you that are new to order flow and new to who I am, just a brief background of my trading experience. This is real-time trading experience. I've started on the CME floor as a runner with Dean Witter Reynolds. That was in the early 1990s. Eventually, as I saw the exchange offering different forms of electronic trading, CME had Globex, CBOT had Project Day, NYMEX had Access, I realized, that's probably going to be the future of trading. And I left the floor to work on the off-the-floor trading desk, where I would be trading electronically for the firm. And I spent a few years trading electronically with Dean Witter. After that, I joined another company, EDF Man, the big English trading company. I spent 2 years there as a global macro trader. Then I left to join Commerzbank, where I spent 3 years as a Eurex trader, a licensed Eurex trader, trading bunds, bobbles, shats against the U.S. products, the 10 years, the 5 years, and the S&Ps. Then, after September 11th, I needed a break. I lost some friends in the attacks, and I took about 6 months off and basically just chilled out. Did some traveling, and eventually, when I said, I got to get, I missed the markets. I want to start trading. I joined this company called Cargill. For those of you that aren't familiar with Cargill, it's one of the largest companies in the world. It's a privately held company, but it's a big commodity trading company. I joined their trading desk in Chicago, and eventually they sent me out to Singapore to set up a trading desk when the exchange in Singapore decided to go electronic. I spent 4 years there. And after that, I joined JP Morgan. I was the vice president of futures trading. I spent 8 years there, and it got to the point where I was just really tired of the whole getting it in the morning, going to the office, spending more time in the office than in the house. And after my daughter was born, I was like, this is ridiculous. My daughter was just born, but I don't have any time for her. So I left. I left JP Morgan in 2013, and my thing was, I was 43 at the time. I said, there's more to life than, working in a corporate environment. I said, I know how to trade. I'm going to just trade for myself. So I started writing a book on trading with the order flow, which is what I used, throughout my trading career. And then as I was writing my book, I was still trading for myself. And the software that I was using to analyze the order flow, I realized it could do so much more. So I started this company called Orderflows.com, which is my software company. And I'll explain that a little bit more later. But, the book that I wrote is a 150-page book. And if you stick around to the end, I'm going to show you how you get a copy of my book for free. It's a very interesting book. A lot of people tell me, it's made a big difference in their trading. And I'll give you a link where you can go and download the book for free. Now, I mentioned briefly about my software company, Orderflows.com. And the reason I bring that up right now is because, the charts that I'm going to be using in this presentation are generated from my software. Okay, it's you got to trade with, something that is going to make your life easier. And I created the software for my own trading. And it wasn't until I started showing other trader friends the software that I was using, which basically took the basic order flow software to another level. It really opened a lot of people's eyes, and it really transformed a lot of traders from borderline, breaking even, some days, up a couple $100, some days down a couple $100, to being consistent And that's what you want to be as a trader, is you want to be consistent. So before I jump in here, just a brief disclaimer, do understand that trading involves risk, okay? There's no guarantee in this world. I like to think the markets will keep going up and up and up, but there's going to be days where the market pull back, right? John, on the previous one, he just mentioned about Dow 120,000. I hope to God that happens, but in the meantime, before we get to 120,000, it may come back down to 10,000 or 15,000. You got to realize markets fluctuate. So today is September 17th, right? And it really has been a long year. We still got another quarter left. And it's just been fascinating this year. It's like, what else can happen in the world? And further step in the markets this year. It just seems so chaotic, honestly. As a trader, you really want to make sense of what's happening in the market. Just some headlines. Global food markets brace for uncertainty in 2021 because of COVID. Traders brace for haywire markets around the presidential election. Global stocks and oil prices drop as investors brace for another week of uncertainty. If you read the newspaper or watch news, it's all basically just gloom and doom. Okay. Donald Trump the other day, 2 weeks ago, sent out a tweet. All right. Hey, Dow Jones just closed above 29,000. Great news. Yeah. Yippee, yippee. What happens? The market sells off the next day and sells off, over the subsequent days. Yesterday, right? Jerome Powell, Fed, we're going to keep rates steady. Okay. That's should be good for the markets. Markets did rally, but as Powell was talking, the markets rallied up to new highs and eventually sold off to new lows and went lower. And right now we're down another 1.5%. So don't panic. There's money to be made during market uncertainty, right? But keep in mind, everyone always talks about volatility. Volatility can be your best friend, and it could also be your worst enemy. It's like having a girlfriend or boyfriend. Sometimes you love them, sometimes you hate them. That's what volatility is. And I want to share with you order flow strategies that work in normal market conditions as well as volatile market conditions. Now, please remember, right? The market does not trade in a bubble, right? In the sense that you should look beyond what the bar right in front of you is doing and understand what the market is doing in general. Got to be asking yourself, is the market trending up or is it trending down or going sideways? Now, order flow shows where and how much traders are committed to the market. And that's important, right? Because when someone's in a position, they are committed to that position. They're either going to be making money, which is good, or they're going to be losing money, which is bad. And at some point, they're going to have to get out. And that's all going to show up in the order flow. Now, in the old days, when people talked about order flow, those little ticker tape machines, with the, the prices coming by and the stock name saying, oh, AT&T traded 5,000 contracts at, or 5,000 shares at, 21 and 3/8. Now, there's the time and sales. Everything is traded electronically. But to be honest, time and sales moves very fast. And with the proliferation of algorithmic trading, a lot of it happens on very small lot size. And, it could be happening on one contract. And you can't keep track of it. Now, what a lot of traders like to look at is the depth of market, which is the order book, right? Where you could see what the passive buyers or the passive sellers are doing, how much they're working at a certain price. And you could also see, when aggressive buyers or aggressive sellers are active in the market. But to be honest, looking at the time and sales or looking at the DOM is very confusing, right? You need a way to organize it so that you can use it, right? And we all like to think that we're the smartest person in the room, in the sense that, we could make sense of everything. But to be honest, when things are happening so fast in the market, it's very difficult, right? So you need a way to take all that information from the DOM, from the time and sales, and utilize it. Okay, so a volume footprint chart, an order flow volume footprint chart takes all that information, right? That's scrolling through the DOM, that's moving so fast, in a second, hundreds of contracts trading, or what you're seeing, on the bid and offer, you see trades going back and forth. Okay, I said, unless you're a brainiac, you're not gonna be able to make heads or tails of it. So why not take that data and put it into an easy to read format, right? Which is the footprint chart. So take all the trade data from the time and sales, the information of executed trades on the dome, and put it in a chart format, which we're all familiar with, so that we can analyze how much was bought on the offer, how much was sold into the bid, and make educated trading decisions based on that. The footprint chart is going to allow you to see where buyers or sellers are stronger or weaker, when buyers appear after the market's been selling off, or when sellers appear after a rally, right? That's very important information. You're going to see where the value is right now, where the market is trading. You're going to see when the market is getting exhausted, and when people talk about, if you're not familiar with the term market exhaustion in terms of trading, what market exhaustion is, think of this, right? Market's been selling off. Okay, where is it going to stop? Right, it's going to stop eventually, and it's often going to stop when the last seller has sold, just as a rally will stop when the last buyer has bought. Right, if there's no more buyers in a move up, then the buyers are exhausted. Right, what do you expect the market to do? Go higher? No, of course not. It's probably going to stop right there, turn around, and sell off. But the order flow chart allows you to see all that and much more. So what makes order flow so useful is you can use it with your existing chart, right? You could use it with time-based charts. You could use it with range-based charts. Use it with tick-based charts. So if you use a 1-minute chart, you could use order flow. If you use a 8-range chart, you could use order flow. If you use, a 1,000-tick chart or a 1,000 volume chart, you can use with order flow. If you're trying to read the order flow from the depth of market, the price ladder, or time and sales, you really got to concentrate, and you're just sort of limited to that chart, that minutia in what's happening in the market. So, this is yesterday. All the charts I'm going to be showing you just happened yesterday. Okay, yesterday was a very fascinating day in market activity. So, with order flow, there's 3 main things you got to keep in mind. And what they are is the delta, the imbalances, and the point of control. Now, the delta is going to be the net difference between the aggressive buyers and sellers in the market. In the old days, when the market would go up, you'd call your broker and you'd ask, well, why is the market going up? You'd say, well, there's more buyers than sellers. No, it's going up because you have more aggressive buyers than passive sellers. They're buying all the offers on the way up and moving it higher. They're looking for the next higher price. And why that's important is because that's a piece of information you're going to get from the order flow, and it's called the delta, right? So if you see a bar that has positive delta, right, what that means is aggressive sellers were in control of the bar. And the delta on most order flow charts, let me get my pointer here. Okay, it will appear along the bottom of the chart. So you can see each bar has a delta. It's either going to be a positive number or a negative number. So when you're up trading near the high of the day, as we were yesterday, around 142, you notice the delta, right? It's negative. It's getting stronger negative. That's not a good sign of a market ready to go higher, right? We had just shot up, if you remember. Then all of a sudden, delta is getting negative and it's getting stronger, minus 83, minus 405, minus 450. So over this group of 3 bars, there was some strong selling going on in here. Okay, so if you're thinking, well, maybe this is a nice pullback, I can be looking to get long. No, right? You should be thinking the opposite, because you're seeing, well, there's some very strong selling going on. Now, imbalances is when you have more aggressive buyers than sellers, or vice versa, in the 2-way auction between the bid and the offer. And it will appear in the order flow as a red number, or for a selling imbalance, or a blue number for a buying imbalance. Okay, and again, that's important, because in a bar, right, some bars have evenly matched order flow, right, where traders are happy to transact. It's not necessarily out of balance, right, because the market exists to facilitate trade. But when you start seeing markets going out of balance, when you start seeing bars with many selling imbalances, chances are the market's going to go lower. Or just if you have multiple buying imbalances in that bar, in the 2-way auction, it's telling you, what's going on between the bid and the offer. Prices the market tends to go higher. Okay, it's why you see oftentimes in markets moving up, you're seeing buying imbalances. In markets moving down, you're going to see selling imbalances. Now, the point of control is the price level in a bar with the most volume. Now, every bar has a point of control, and think of it as the value, where the value is in a bar. Okay, and remember, markets move higher looking for new value areas. Markets move lower looking for new value areas. So, keep those three things in mind when you're analyzing the market. So a question that I got a lot, right, which is really what I want to talk about on this presentation is, over the last 6 months with COVID, with everything going on in politics, is how to trade order flow when the market's very volatile. Well, the answer is simple. You trade it the same way, right? A big mistake that I saw a lot of people running into back in March and April of this year, basically blowing up, or not say blowing up, but taking big losses on their accounts, is volatility skyrocketed. If you remember, VIX, doubled in a few weeks, went up to like the 70s or something, which is off the charts. It's off the Richter scale, so high. Is the way they handle it was they widen their stops, and when you widen your stops, you take on a lot more risk, right? I mean, who wants to do that? I know I don't want to do that. I mean, the whole point of trading to be successful and consistent is to limit your risk. As soon as you start widening out your risks, when you take a loss, it's bigger, right? Another mistake they started doing was, well, I got to fine tune my indicators to, take into account all this extra volatility. So, instead of looking at whatever, a 21-day move or 21 period moving average, all of a sudden they're looking at 35 period moving average. So they're trying to mathematically smooth out the volatility of the market, and again, they're still running into problems, right? I've worked with a lot of retail traders over the last several years, since leaving the institutional side, and one of the big problems that retail traders face, and the reason why they're not so consistent, is they keep changing things, right? What you got to do is you got to find something that works. You stick with it, through good times and bad times. I've seen people take 3 bad trades and immediately say, oh, you know what, this doesn't work. Well, if you traded long enough, you're going to have periods, you're going to have days where it just seems you can't do anything right. Every trade that you take just doesn't seem to work out. That's how the market is, right? We all want to have days where, we got 100% winners, but those days are rare, right? I know guys that are, some days they show me their trading journal, the trading log, they've got, they end up, the day a winner, but they only had 20% winners on the day. It's not about trying to, after the fact, curve fit your indicator or widen your stop, so you could scoop up maybe some more winners, but your losses are so big. That's not how you trade in volatile times, right? Why take on more risk than necessary or trade the way that you trade under regular conditions? So order flow is about understanding what the aggressive traders are doing in the market, right? And you can see it on a dome, but watching a dome, the depth of market, the price ladder, is going to give you a headache, right? Because the dome is nice. It's a useful tool. I look at it, but I use it to help manage trades. But, trying to make trading decisions off of it, especially with volatile market, it's moving so fast up and down, especially markets like NASDAQ, you can't make heads or tails of it, right? But if you have a nice way to organize it, which the volume footprint chart is, you're going to be able to see what's going on. Now, this was the low yesterday, the new low around 230. We made a low eventually later on in the day. But at this low, by reading the order flow, you could see there was market exhaustion. You could see there was divergence, right? You're at a low, and all of a sudden you're seeing buyers come in. That's what the divergence is in the order flow. So you're seeing aggressive buying coming in at the low of the day, right, which is bullish. You're also seeing aggressive buyers step into the market. You're seeing multiple buying imbalances coming in, and you're starting to see value start to move up when this whole time on the way down, it's been moving down, right? Now on a bar chart, right, this is the low here. You're just guessing blindly, basically. You can't see, well, is this move exhausted, right? Is there divergence? Is there aggressive buyers? Are there buying imbalances? What's value doing? You can't make those decisions off a normal bar chart. So again, market exhaustion, right? When the last seller has sold in a move down, or when the last buyer has bought in a move up. And here at the low of the day, right, we have a sign of market exhaustion, right? You can see it in the volume right there. One contract traded at 75.5 in this bar, right? The previous bar traded 17 on the bid. This next bar traded 1. Okay, so do you think this market's going to go any lower? Right, the bars turned around, closed higher, right? When we're trading right around the low, you finally get the last seller clicks sell. You know, we've all sold the low of the day. We all hate it, but you know, the market's moving down. You know, people are FOMOing. You know, oh, I got to get short. I got to get short. Finally, the last guy gets to his computer, jumps, hits the sell button. Boom, you made print right there at the low. Market reversed up. Okay, market exhaustion. This is a very simple concept in order flow. Now, divergence occurs when net buyers appear at the end of a move down, or net sellers appear at the end of a move up. And we have it here as well, right? We got our low of the day. We have positive delta, right? So again, delta is the net difference between people buying the offer versus people selling the bid, right? Those are the aggressive traders. So we're at the low of the day, and for a market to go lower, right, as you see, we're taking out the lows of the day. We're doing it on negative delta, minus 500, minus 1500, minus 360. But we hit that low again. But now the buyers have stepped out of the woodwork. Yeah, this is a great time to buy, right? And they get long. They start getting long in here, 76, 77, 78, right? This is a divergence in order flow. Now, aggressive participants, right? There's two types. There's aggressive buyers, there's aggressive sellers. Aggressive buyers trade immediately by buying the offer price, right? They trade at the market. Aggressive sellers is sellers that do the opposite. They trade immediately by selling the bid price, right? They trade at the market, though. That's the important thing, is they want to get in or get out of a position, so they're going to trade at the market price. They're not going to be working a bid or an offer in the order book. No, aggressive buyers come in and they start buying whatever's offered, right? And that's going to show up in the delta, right? If you have positive delta, you have aggressive buyers. If you have negative delta, you have aggressive sellers, right? So what happened at this low of the day here? Positive delta, right? Also, you have the divergence. Even in the next bar, also positive delta. So we're starting to move away from our low, and aggressive buyers still stepping in. And we rally up, right? We rally up, you know, over 10 points, and we get up here. What do we see? Aggressive sellers coming in. Now we're seeing negative delta, right? We're seeing negative delta after a move up. So two things are going to be happening. One, either the move is going to stop, or two, it's going to go sideways, or three, the aggressive sellers are going to take over the market and the market's going to continue down. In this case, the aggressive sellers came in here in this third bar outside the box, slammed it, right? It was basically a 5-point sell-off in 30 seconds. This is a 30-second chart. And then the market actually, you know, started going lower again, and eventually we took out the lows of the day, made new lows. So we see aggressive buyers coming in at the lows, rally up, aggressive sellers come in, take control back from the aggressive buyers and move the market back down. Now, imbalances are the result of aggressive traders, right? So when a buying imbalance occurs is when the aggressive buyers outnumber the aggressive sellers in the two-way auction by at least 4-1. Selling imbalance is the opposite, when aggressive sellers outnumber the aggressive buyers in the two-way auction by at least 4-1. So remember, right, the market it's a two-way auction. There's a bid and there's an offer. Okay, it doesn't trade at a single price, you know, like it doesn't trade 6 and 7. It's 5 bid at 6, 6 bid at 7, etc. So you can see there's, as the market is moving up, you're seeing buying imbalances. As the market hits that level, pauses, starts coming down, you're seeing selling imbalances. Just on this move, this dramatic move down, you're seeing mostly selling imbalances in here. Okay. Now, value in a bar is regarded as the price level where the most volume traded in that bar. And the value level in a bar is the POC, it's the point of control. It's the price level where the most volume traded on the bid and offer side. Okay, so every bar has a point of control. Every bar has a price level where it traded the most volume. Okay, then you can see in each bar there's like a gray box around it. right? So as we're moving up from this low, right, on the move down, you see lower points of controls, markets putting in lower value areas. We hit our low, market starts ticking up, moving up, higher point of control on the second bar, higher point of control on the third bar, higher point of control. It gets up here, we got a point of control around the 88 3/4. Next bar, lower, 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 as the market continued on down. Now, all this information is there on the time and sales and the depth of market, but it's so confusing, right? It's all happening so fast in a volatile market. Forget about trying to look at time and sales. You can't keep up with it, period. DOM, okay, it's an acquired skill, okay? But you're really focusing in on certain things, right? When you're looking at a footprint chart, you're seeing a lot more information than just staring at, 78 on the bid, 98 on the offer. It's going to give you a better view of the market. And at that low of the day yesterday, that initial low at around 233, we're seeing a lot of things in the order flow that's very bullish. You're seeing market exhaustion. You're seeing divergence. You're seeing aggressive buyers. You're seeing value moving higher. You're seeing multiple buying imbalances. It's like the planets are aligned, right, so to speak. It's like you got a lot of good evidence that, yeah, this is probably the low for now. Okay. Yeah, I could safely be buying it somewhere, off this low, around the 79, the 80, even 81 area, right? For a nice move up into a nice quick move. Again, this is a 30-second chart. You're talking 2-3 minutes, 6-7 points out of the market in the E-minis. Now on a bar chart, you can't see what's happening in the order flow, right? You're not going to see that exhaustion. You're not going to see the divergence. You're not going to see the aggressive buyers. You're not going to see the buying imbalances. You're not going to see what value is doing. So order flow is not about trying to predict a high or low, right? It's not, I'm going to predict this low here. No, it's about reacting to what's happening in the market, right? Order flow is not an indicator. It's the market, right? The market tells you what is happening. It's up to you to listen to what the market is telling you, right? This is an E-mini 1-minute chart. Okay, so this was the high of the day earlier, right? We probably about 40 minutes earlier, we had just hit a high. Okay, after the Fed announcement, we rallied up, and at the high of the day, what are we seeing? Okay, well, we're seeing a divergence, right? We get up to the high of the day, all of a sudden we're seeing negative delta coming in here and getting stronger, minus 83, which is not the strongest number, but minus 400, minus 450, minus 566, minus 1050. Okay, we're making this methodical move down, and in the order flow, we're seeing a lot of negative information, right? We're seeing aggressive sellers taking control of the market in the delta, right? We're seeing the value, which is the point of controls, migrating lower, right? The moving down on each bar. It's not, just sort of hanging around going sideways. No, it's lower, 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 lower. Now, the other important thing to note, the thing with, when you talk about value in a bar, okay, most people don't talk about the value in a bar because they say, well, it's so short, okay? But do you ever wonder why the market pulls back exactly to a specific level in the bar? Well, that's the value area generally, right? You can see on this move down, okay, we have this red bar up here at the top. You see the point of control coming in here was at 34.18. The next bar trades right up to that level. That's the high of this bar. Market moves down. We put in a new lower point of control up here at 17 1/4. The next bar, we trade one tick past it. Okay, and put in a lower point of control. It's coming in here at 34.16. Next bar, we trade right to that point of control and sell off. Just as on moves up, right? We got the point of control here at 12. You see this green bar? That's the low of this bar, right? You got this red bar here, point of control. It comes to within one tick of it, right? This next bar, we trade up to this point of control, one tick past it. Next bar, this red bar sells off. It comes right back to that value area here before closing back in the middle. So, it's fascinating why bars pull back to certain areas, but you can see it in the order flow why it pulled back to that area is because that's where value was in the previous bar. I mean, imagine, being a trader, a beginning trader, and someone's telling you, yeah, I got a good idea of where the market could pull back to in the next bar based on what is happening in this bar. That's very useful and good information that you can use in your trading analysis. Now, what else are we seeing up here off this high, right? We're seeing selling imbalances coming in, okay? All these red numbers in here, right? Selling imbalances. Yeah, we got a few buying imbalances. Okay, it's not the end of the world. You do have some aggressive counter trade, but mostly you got aggressive selling coming in. So again, at this high of the day, we're seeing a lot of negative order flow. So at the low, we were seeing positive order flow. At the high, we're seeing a lot of negative order flow. I'm not trying to predict, oh, we just hit this new high, I think this is going to be the high. No, I'm letting the market tell me that this is potentially the high of the day based on what's going on in the market. Now, just another quick market, the euro currency, okay? Again, this was yesterday. We had this nice, steady, methodical move down as well, down into new lows, new lows, new lows, from the 65 area where we're just trading sideways. But you're looking at the exact same things, right? You're seeing the point of controls moving down, right? You can see how on this move down, we literally just pull back within a tick or two of the previous point of control. Okay, you're seeing negative deltas in here, right? So aggressive sellers are in control. You're seeing very little aggressive buying. I don't want to talk about much this today, but I go over this in other presentations, is understanding the max and min delta. You see very little aggressive buying in these bars with the aggressive selling going on. You can see that in the max and min delta. You're seeing selling imbalances, right? 2 here, 2 here, 4 in this bar, 1 in this bar, 1 in this bar, 5 in this bar, right? But really these 3 bars right here should be the sign to you that this market is probably going to be making new lows. You're seeing market exhaustion in this bar, the small volume being traded at the edges of the bar. Now, earlier I said in volatile markets, you trade order flow the same way. Why? It's because you're reacting to what's happening in the market, right? You're reacting to what the market is telling you and showing you areas you can enter the market with potentially lower risk, so you'll be reacting to what the market is giving you. Now, I want to go through a bunch of different charts here really quick. And again, this was at the high of the day, okay? So, I just mentioned in volatile markets, you trade the order flow the same way, okay? So this is an E-mini 1-minute chart. This is at the high of the day, okay? And you're seeing value moving lower, aggressive sellers in control, very little aggressive buyers against that. You're seeing divergence at the high, you're seeing selling imbalance, you're seeing resistance selling, right? On a 5-minute chart, you're seeing the exact same thing. On a volume-based chart, this is a 2500 volume-based chart. Again, you're still looking at the exact same thing. In this case, you don't have the divergence, but you got everything else. You got the selling imbalances, you got the net aggressive sellers, you got point of control moving lower. Everything is still the same. So the 1000 tick chart, same thing, right? And you even have what we call a prominent point of control, this red point of control up here, which is very important in order flow analysis. It's telling you there's someone up here defending this position. It's resistance in the market, and it's based on what's happening in the order flow. You got your divergence, got your lower point of controls, you've got your selling imbalances in here, you've got your negative delta, right? So, there's so many different chart types. So many people, everybody almost looks at a different chart type, whether it's minute-based, range-based, tick-based, volume-based. But I'm showing you, it doesn't matter, right? You can use your chart and add order flow to it, and you can find yourself making better trading decisions. This is an 8-range chart. Again, all the same information on the minute-based chart, the tick-based chart. You're looking at the same data points. It's all giving you the same information. So I just showed you 5 different charts. And it's not because I want you to have 5 different charts open and at once and make sure everything matches up. No, that's not the point. The point I'm showing you these different chart types is because you're looking at the same things, looking for the same things rather, no matter what chart or what market you're looking at, right? Whether you're looking at a 1-minute crude oil chart or a 1-minute micro E-mini chart, you're looking at for the same information. Adding order flow analysis is the difference between success and failure for many traders. Okay, and order flow generates a lot of useful information for a trader that you just don't get by looking at a normal candlestick chart. So, why not use that information to your advantage? And the great thing is you don't have to throw away your existing method of trading, right? I'm just saying, why not add another tool to help you make more informed trading decisions? Order flow is trading in its purest sense. It's reading the market. It's reacting to what's happening in the market and being able to make a great trading decision. Excuse me. So hopefully by now, you should be ready to add order flow analysis to your trading, even if it just helps you keep out of a few bad trades a day, at the end of the month, that could be the difference between having a successful month and a losing month. Now, there's different ways you can go about learning order flow, right? You can try and learn it on your own, right? You could spend years looking at a screen trying to figure it out. More importantly, you could waste a lot of money trading, thinking you know what you're looking at, but you don't really, and you lose that money. Give it to the market and it's gone. That's to me the biggest mistake a lot of people don't realize is, well, I'll just try and figure it out on my own, and they just waste their money. Or number two, you could get the education and software from a trader who has successfully traded order flow at the highest level for decades. That's why I talked about my background earlier. So where I applied order flow. That was my career. It was trading, for JP Morgan, was trading for Cargill, was trading for Dean Witter. That's how I made my living. And you don't last that long at these firms unless you're making money, right? They don't keep you on, a training program for 2 years. If you're not making money for the bank, in a quarter, like what's your problem? So you're going to skip the massive trading losses because you're going to get the education, and you're going to skip the wasted time searching on Google, trying to figure it out, watching videos. Oh, is this what I'm supposed to look for? No, I'm going to tell you what you're supposed to look for. Order flow is the most current information available to a trader. It's not some indicator, it's just the market. Order flow is not based on pivot levels. It's not Fibonacci. It's not based on Elliott wave. It's not based on MACD. It's not based on VWAP. Order flow is what's trading on the bid, what's trading on the offer. Order flow is the market. So the order flow is trader software. It runs on NinjaTrader 8. That's the platform that I prefer to use. It works great. I haven't had any issues with it in years. And it's got a volume footprint chart with 7 pre-programmed order flow indicators already in there. Okay. And you're also going to get my chart template. And I'll also teach you order flow trade setups. Normally I sell this software for $8.99 on our website. Now, I'll give you guys a quick preview. Later this month, we're doing a upgrade on the software. Orderflows Trader 2.0 is going to become Orderflows Trader 3.0. And, we're still working on it. I'm in the beta testing of the new software now, but it should be ready before the end of the month. And, if you get the software now, you're going to get the free upgrade to it. And if you already have the software, you're also going to be upgraded for free. I don't like to charge people for upgrades. You buy the software, you get the upgrades for free. But having order flow software is one thing, right? The next thing is knowing how to use it. Again, you don't just buy the software and, oh, that's it, go on your own, figure it out. I also give you a lot of education on how to trade with order flow. And each week I do a private live group training just for users. If you can't attend, you could watch the recordings. But if you can attend, you could ask me questions. And people email me questions during the week, and I try to answer them as well in the session. There's over 80 sessions already, I think 86 or something that we've done over the last 2 years. Some people charge $200 a month for extra training. Why? You buy a software, you want training on it, right? So why pay extra for training? I give it to you for free. But I also give you access to my order flow trading course, which is a course on Trading with Order Flow. It's 20 lessons of 15 hours of video instructions. It's a great course for people that are new to trading with Order Flow. Now, for people that are already into Order Flow and they want advanced trading information, I also give access to my Inner Circle video series, right? It's this collection of 56 videos on advanced order flows, tricks, tips, and analysis. So, the software is normally $8.99. The Order Flows Trading course, $297. The Inner Circle video series, $497. That's already $1,693. Plus, you're going to get weekly live group training where you could ask your questions. Tell me, oh, I don't understand this thing about the order flow. Can you explain it? And I explain it there for everybody that's in attendance. So think of it as this way. It's like skipping the line at Disneyland, right? It's like having Mickey Mouse come out and say, hey, come over here. I got a secret entrance for you, where, you're really brought up to speed. But I got a special bonus for you guys that come to my presentations through Investors Expos. I have a course called the Order Flow Playbook. Normally it's $297. I'm going to give you that for free as well. And it's a great course. It's kind of an advanced course on order flow, and then there's a bunch of trade setups in there as well. So, when you add the Order Flows Playbook into that, it's almost $2,000 that you're paying for that. But, you're not going to be paying that. But, what other people are saying is, they're saying, Mike, here, Sheila writes, your order flow software is remarkably helpful. I can clearly see now what's happening in the market. Like, for example, who's in control of the market on a very specific time and who's getting weaker as well. Ziad writes, I'm very thankful for all the learning. And yes, my trading and understanding of financial markets are way much better than a lot of other traders out there. Okay, so if you're worried you don't know how to make heads or tails of order flow, I also include 2 guides, my top 3 trade setups and hidden trading opportunities that will help you understand what you're seeing in the market. So, to become successful, it takes work, right? You got to think about what you got to do, then you got to plan it, and you reach success. So for a one-time payment of just $675, you're going to get my software, okay? So go to orderflows.com/off2, right? It takes you to the page, right? It's just a one-time payment. Now you have to pay, your data fees. Of course, there's no way of getting out of data, but those are minimal if you're a trader, right? It's cost of doing business. So it'll take you to this page. Just scroll down, click this button, I want now, and just take you to PayPal. It's paid through PayPal. I don't get your credit card. I don't want your credit card. And after that, it'll take you. I'll send you out all the information. It takes probably, takes a little bit of time to process it, but you'll get all the software and all the training and all the guides emailed to you to your PayPal email address. Now, if you want my book, go to this page, orderflows.com/book.html. You'll have to enter your name and email address. Make sure you put the book.html on the web address. It's not orderflows.com/book. It's orderflows.com/book.html. After you enter your name and email, you'll be taken to a download page where you can download the book instantly. So, the best piece of advice I give to you right now is get started, right? It's a small payment, and of just $675, it's a one-time payment, and we're doing an upgrade of the software. It should be out by the end of this month, and you'll be able to get that upgrade, which is a big upgrade, right? I don't do upgrades all the time. We do them about every 2 years, and we've got five new indicators included in the software as well. So after this month, and when we release the new software, actually the price is going to be increasing. So this is your time to get the software at the lower price and take advantage of the upgrade when it comes out. So thank you, Anna. I don't have time for questions, but if anyone's got a question, just email me, mike@orderflows.com, and I'll do my best to get back to you, relatively soon. So thanks, Anna, and I'll throw it back to you.
Thank you so much, Mike.